Good morning, traders. It is Tuesday, October the 8th. Taking a look at the charts, we got the SP 500. We've been talking about this for the last about a week here, that we're looking for that big sell-off in the market, and then we're looking for the price to oscillate and get into this high volatility time, much like we saw in August. And the big question is, do we get something like August? Or are we going to potentially get something like this where we get into, we just get a bounce, we get an oversold bounce, and then it goes down for a big, deep three-wave correction and goes lower? And that's the big question. If we do go into a big sell-off, we're going to start to break these lows, and it could be a start of something much larger. And this will be the next key support zone on the chart that we could easily get a bounce off there, but could be the start of something much larger. So we're going to let the markets do its thing here. What we are seeing this week is very similar to this type of price action. We're putting in a top, and we go from oversold to overbought, and we're going to probably oscillate back down, and we'll probably just continue to see the market be really volatile. And during this time, this is when we see bonds move higher, and that's what we're starting to see. Bonds are moving up today. Bonds will buck the trend and typically go higher, not always, but in most cases they will. And that's why we are positioned in bonds at this point. Stocks are down 0.6% this morning. Bonds are up 1/3%. Let's just go to bonds, take a quick look. You can see bonds had a pretty deep pullback this morning, but overall showing a nice reversal in terms of it sold off and then money stepped back in to buy to the upside. Very similar to over here. You see a long lower wick, and then it rallied up and took off. Hopefully we'll see this push up towards these highs and go beyond there. If we look over at the other safe havens like gold, gold is up 1/3%. Yesterday, the metals really took a haircut, same with miners, but overall, recovering about half of that sell-off there from yesterday back. Gold up 1/3%, silver up 0.6%, and they're trying to carve out a bottom. Again, we've got this bullish pattern on metals to the upside. They are consolidating in this kind of downward channel, and if it can start to break out and start to build a base here, then we could be off to the races for it to start another major leg. But at this point, our trend analysis, our bias, our momentum, everything is down at this point, although it's showing early signs of a potential little bull flag for the second half of the run to the upper end of this falling channel resistance area. And it's also right through the heart of all this consolidation, where it was a pause. It traded through here for 4 days. It was a top. It was price kind of exhausted through it and back down. So that'll be the next level here for silver, is around this 1825 area, could be, or 1820, could be a fairly significant resistance area. But once broken, we could start to see it really pick up speed. And whatever silver or gold does, the miners will do, or really they all kind of follow the same play. I know some of you own a bunch of silver, you own gold, you own some like GDX, and then you own Nugget. I mean, they're really all the same trade, and if it goes against you, you'll blow your account up. You really just need one position in them, or a couple of small positions that equal one position. Don't go loading the boat with thinking they're all diversified and you're doing something good. It'll only work in your favor if it goes higher. If it doesn't, you blow your account up. It's that simple. You'll do years of damage in a couple days or weeks. Anyways, let's go over to energies real quick. Natural gas down 1%. Again, we're looking at this potential type of pop in the market, very similar to what we saw over here. We're looking for the market. It's oversold. It had a knee-jerk reaction, short covering pop, and it could continue to fade down, very similar to over here where it pushes down, starts to build a little bit of a base that eventually it starts to pop and move higher. We could look to potentially get long. This is what we did over here. We built this bottom, put in a base, started to build a platform, and we caught this trade, and we ended up doing a nice move. I think it was 11 or 12%. I can't exactly remember, but we caught this nice middle zone, which was going to bring us into resistance. And then the market ended up having a blow off top, put in a topping phase, and then it back down to where we originally got into. And what we're looking for are typically these kind of safe zones in the market. When it goes from a decline, it builds a stage 1 base, and then we want to catch it on the accumulation phase, the markup phase, stage 2. That's where the easy money is. And then once these targets are hit, you can start to back out of it because things can get pretty ugly, and you go into a topping phase and then a decline, and then rinse and repeat. We'll be trying to build another one of these platforms here over here. Looking over at crude oil, down 1.2%. It is still struggling. It had a short covering bounce, meaning it got way oversold. A huge sell-off from that bombing spike, and then a short covering rally. Everybody covering their shorts, and now their shorts are coming back in again, driving price back down. And again, this is going to be a really key support zone down here around this 50-50 area. If it breaks that, it closes below it, then it could be lights out for $44 per barrel, which is going down to this other here, this level, $42 per barrel. Somewhere in this 42 to 44 range would be the next potential downside target for crude. Also, I want to quickly mention that going forward here, I'm going to start adding more educational information to the members area so you can understand what some of these indicators mean on our charts. And more or less, it's cycle analysis, and it's trying to identify trends and oversold, overbought territories. Each line on here represents something different. For example, when we get a cluster low of cycles, usually it means we're coming into a very significant bottom in the market. We saw another cluster low with all the cycles bottoming over here. And bottoms are usually standout. Tops are much tougher to trade. Tops, you got to trade with the trend and look for internals and other things to roll over to give us signs of these sell-offs. We did catch each of these sell-offs here with a inverse position. This one we didn't do the inverse. We actually went long bonds instead. But we can identify these rollover periods in the market with shorter term analysis, but I'm going to explain in some videos and detailed information on how to use these more or less. We've got our momentum highs where it's overbought and then oversold, and then we've got the yellow is more or less our swing trading. So in an uptrend, you're looking to buy when the cycles are having these pivot lows in the market. Those are dips. When you get into a downtrend, you'll be looking to sell any overbought market, although this downtrend ended somewhere back in here. But again, once you get into a downtrend like we saw all of August, if we were to just zoom into the August a bit more here, you can see when we get into a downtrend where these bars were all red, we're looking, when we have these cycle tops, we're looking to get potentially inverse the plays or add to bonds or get into bonds because the stock market is primed and ready for a quick pullback. You can see these are very quick moves. The market drops a lot faster than it rises. Typically, it's 5 to 7 times faster the market will fall than it does rise. So it takes 1, 2, 3, 4, 5, 6 days to go up, 1 to 2 days down. 1, 2, 3, 4, 5 days up, 2 days down. And that's how the market always moves. There's lots of potential to the downside, but shorts are very quick. You get in, you get out, and much different than a trend trade where you get into an uptrend and you can buy the first pause or pullback and you can add on pullbacks until eventually technicals start to break down. You can catch these trends. Shorts are very violent, very quick in most cases. And anyways, we'll go through all this in time. The long blue line there more or less is telling us we are still in a bull market, major upward cycle. And then we've got our shorter term kind of position swing trading cycles, or the pink line here, catching these kind of major, you're looking at 4 to 12 week moves in the market to the upside depending on how they flow. But anyways, I'll cover this stuff in more detail as we add more to the members area. We're still just working out a few little kinks and bugs here and there and getting our live portfolio working properly to send out SMS and email alerts instantly and track the positions so that everything is done really well for you and sent to you instantly. So those things are top priority right now, and then we'll get into this educational and adding these tools and updating these charts daily in the members area so you can use this type of analysis to know when you should be buying stocks and buying dips in stocks or breakouts, and when you want to be out of stocks and looking for safe haven plays, metals, bonds, all this stuff. This trend analysis, cycle analysis on the SP 500 is very powerful to allow you to trade other asset classes and to time your different types of trades. Anyways, that's it for now. Talk to you in a bit. Bye-bye.